Hey guys, let's talk about why your banks need you, why your bank can't survive without you. Again, we know this from just recent bank runs, let's call it bank runs, which is basically over the last few years. If the customer doesn't trust the bank or they hear say that the bank is going down, people go in and withdraw their cash. That's a sign where we need to realize that without customers, banks can't survive. Okay. So we're going to get delve into that a bit more. We're going to talk about banks, talk about how they need you, why they need you, how they survive, and why you are more important to your bank than you think or now. I'm the CEO of MoneySave and Oruka. We create which is basically a payment ring. Again, if you look at it in the grand scheme of things, we're a fintech. I have a video around that, different between a fintech and a bank. So we're a fintech, not a bank. But more importantly is that you allow customers then tap to make payments, tap to receive payment for small businesses. And we're excited basically on what we can offer to our customers. And we don't just do ring, don't do payment rings, we also do bracelets as well. So everything I wear basically is functional. You might think is just fashion. It is functional in the sense that I use these things. So for this I actually use this to share my business details, and this I use to make payments as well. So again, we have a full set of wearables that actually allow customers make payment and receive payments. We're the first in the world to do this. There are a few that actually do payment rings. There are a few that do health rings. You know them already. But we put our mix in there where we allow customer the flexibility of using different variables as well. So that's exciting. And again, we have a few customers who are excited, and I try to connect the customers here as much as I can. So here's a point, which you don't understand. Still make money. So when people go in and see a building, I think that's the bank, that they're making money or they're receiving money or that they store cash there. They don't. It's actually the relationships that they hold. Okay, a quick example, which we know 100% if you're in Europe, you know Credit Suisse, one of the top banks. We had two top banks, Credit Suisse and UBS. So if you look at it, UBS was actually just slightly bigger than Credit Suisse in terms of numbers in Switzerland. And this is at the top financial hub across the world. Okay. And with that, they turned around just a couple of years and said, hey, we have no more money. Which is scary. And it was over a weekend as well. Again, this is something I personally work close with them on. And I have first-hand experience of what it means for liquidity, which is just cash to dry up in the bank. And what that means when customers turn on you. So it's important to know that, and I think that's what we're going to capture here, right? And most banks, just so you know, most banks actually not worship, but they live on relationship management. That would mean that each customer expects to sign up as many customers as possible, and they try to do that within regulation. So regulation is key for any bank, okay? So you want to make sure that you're fully regulated. So what that means then is you want to make sure you onboard each customer, you know what each customer does, and then drawing that line between knowing what the customer does and making sure you're compliant is where banks have failed. A lot of banks, because for instance, you would know this before fintechs, before we came along, if you wanted to open up a bank, you had to walk into a bank, you have to fill in forms, quite a lot of forms. Nowadays, you can just get up with your app, download your app, do your KYC right on the phone, and you're done. Same thing with our rings as well. You don't even need a card. You could just go in and actually just buy a ring, which you use to tap to make payments. Okay. So now things have gotten a lot easier and better. But the important thing is the fact that most banks are still behind in terms of, just being there for customers. Okay. And the advantage I'll tell you between banks, which I think they rely on, is the fact that it's free banking, right? And a lot of people make that mistake of thinking it's about, free banking because your bank doesn't charge you any money per se. They charge you fees. Okay. Just so you know, one thing is they either charge you fees in terms of when you make a payment, when you go abroad and use your card, those fees are really high. A hidden fee or hidden product that people don't know is actually your deposit. So when you put your money with the bank goes ahead and actually can lend that money out, okay, or can invest that money or borrow it out, okay. So in truth, your deposit is the bank's product. They're selling you deposits, okay. And it's the same thing with us as well. So we don't hold customers' money. That means when we go to a bank, the banks want to work with us. They want to work with us because we're bringing them customers. And again, the bank doesn't care about rings. So if you go to your bank and go, hey, can I have a payment ring? They'll laugh you out of there, right? Because in truth, what they care about is the deposit, not you. They don't care about you in terms of giving you a ring, looking at your ring size, posting this out. That's where we come in as fintech. And then they don't care about onboarding as quickly as possible. Just so you know, even if they onboard you as quickly as possible, it becomes a problem for them as well down the line. That they pass on to fintech. So we have a lot of fintech banks today who would actually help you in terms of onboarding quickly as possible. So just to understand that point again, your deposit is the bank's product. They rely on that deposit. And let's go into some stats real quick here. Again, this is put by my team. Bank failure is, are not rare. 570 banks, this is according to the FDIC. So the FDIC is a deposit insurance in the US where they only pay out when the bank has failed. So if you put a deposit into a bank for 250, up to 250,000 is insured. Same thing with us as well. So any customer that puts their cash with us is insured because it goes through the banking system. But then with that, you can then find out the number of banks that have failed because each bank that fails, the insurance has to pay out. So in terms of that number, we're looking at 570 banks between 2001 and 2025. So in the space of 25 years, 100 banks have failed in the US alone. Again, you can pick up the stats and check any other point in the world. That shows you in terms of context, right? That people fail, banks fail a lot, and it's huge. It's a huge risk to put money in a bank. Based on that, you should then know that you can obviously vote with your feet. What that means then is if you have a bank that is not treating you well, okay, if you have to beg for attention from the bank, then walk away. It's so easy these days to open up a bank account and you owe no loyalty to your bank. I said this already several times in my videos. If you watch these videos, you're not married to your bank. You have no loyalty. You shouldn't have your insurance, your credit card, your loan, and everything with one bank because you've just given them yourself away for free. Right. And in truth, these guys, in terms of the numbers, okay, I remember looking at the news the other day where one bank, I'm not going to mention the bank, they hit 50 million customers and everyone celebrated it. I thought that was one of the most stupid ideas possible for a customer to celebrate that. I'll tell you why. Each customer that goes through to the bank, okay, or the fintech, the higher the number, the less service they can provide to you. If you have a bank that you just opened up, okay, there's a sweet size, a sweet spot there where, okay, if you only have 5 customers, the bank is going to close down, okay, because they can't sustain that. If you only have 10 customers or 20 customers and the bank is a fintech, they might survive. But if the bank has a building, they're going to close down the branch because they can't pay the rent. So there is a cost-benefit analysis that the banks also provide and try and get as many customers as possible. But that being said, there's a number that it hits, and then anything more than that is you're the product. Yeah. So if a bank, for instance, has, and people, it happens a lot, and they all complain and go, listen, my bank won't talk to me. I had a query, and they're still chasing and chasing and chasing, and there's no response back. I'll tell you why. Because there's too many customers there. You should walk away and go to a smaller bank. Because at the end of the day, bank is just what it is. It's a bank. These days, your deposit is insured. You're looking for a product. You're looking for good service. It's like going to, it does make sense to go to the most famous pizza, okay? When you go to the most famous pizza, you know that pizza is the best. It's possibly handmade. If you have to queue up a Rolex, which I hate, by the way, you have to queue up a Rolex with the fake watches that they sell, fake numbers that they sell and, scarcity that they put out there. You know that you're getting something back. The same to Patek Philippe or Richard Mille. The same thing as well with our rings. Okay, they're all handmade. So you know you're getting something in terms of value and product. However, with the bank, you're not getting anything different from this bank to that bank. The only difference to you should be customer service. Okay, that's key. So if you have a bank that has 10,000 customers, okay, what that happens then is you would have 10,000. So you have at least, let's say 10 to 1. So you'd have 1,000 customer service representatives that can service you. That's where you want to go. If a bank shows up and go, hey, we've just crossed 70 million customers. What that says is, hey, we've got 70 million customers. You can't have more than 100,000 customer service reps. Then you have the whole country. Oh, secondly, you have to then throw them all into all the queries that come through has to go through the bot. So what happens then you end up with it's just poor customer service, abysmal, and customers still run there when you shouldn't. Okay. And then more importantly as well, there's a lot of risk there. So you have all these customers, you can have concentration in one country as opposed to the other, or one client type as opposed to the other, and then that becomes a problem. So please, if you learn nothing from this video, just when you see huge numbers, if you see a bank or a fintech advertising huge numbers, run away. Yeah, go to another fintech. There are loads of fintechs. I'm not saying you should just come to us only, or you should, but just go to any other fintech that's small enough that can handle your query. Okay, vote with your feet. That's it. Vote with your feet. And then again, in terms of ease of opening, I think I've talked about this already. So just in terms of the stats there, there are 44% of all fintechs, right? If you want to walk into a bank right now, you know yourself, you'd have to fill a lot of paperwork. You'll probably have to come back a day or two to make sure the checks are done and completed. However, if you went to a fintech would actually get everything done in less than 4 minutes. Okay. About 44% will get the checks done, get your compliance done, and get your account open in less than 4 minutes. They have to go further. Then again, that's where the numbers come in. That's because again, if you've got 1 million customers, you're not going to do everything by AI. You will have to make sure you get the manual input there. So that's one stats to look at. In terms of scaling as well, I think if you look at Australia, I talked about the US a lot, right? But let's look at Australia. So in Australia, I think so far, 37,000 customers have complained about banks being closed in terms of not being able to withdraw cash as well. And recently we had Volt Bank that just recently closed down there. Same thing as well. Deposits were not enough. They didn't have enough customers and customers just ran away. So that's key. Banks cannot live without customers, right? They need you. Therefore, realize that if your bank is not treating you right, go to another bank. If another bank is not treating you right, go to a fintech. We're fintechs. There's a lot of fintechs out there today. Okay. So that's important to note. And then obviously, I think the last point is, which a lot of people don't talk about as well, is the customer acquisition cost. Okay. And this is key. So I can tell you right now, maybe we'll do this in the future. Okay. But right now, we don't do this. Okay. So customers that come to us because they like our product. So if a customer comes to us right now, and then they want to buy a ring because they've seen it somewhere, either they've seen it on this video, which we have a lot of customers. People ask me, I go, why do you do this? I do this because one, I talk to my customers. Number two, my customers, when they talk about my product, people go online and Google. And when they Google, the first thing that comes up are these videos where they can see about the product. They can see me, as a CEO, they can see the board. We have Q&A questions here where we can talk through these things. So that's important, as opposed to a CEO that just hides behind the desk, and then just talks to investors. Okay. A lot of CEOs, that's all they do. They just talk to investors, but we talk to people. We talk to our customers. But what's key as well, obviously, is the fact that one must see the product and they like it. If you see a bank that pays you £50 to switch, or pays you $50 to switch, or $100 to switch, or introduce someone and get money, run away from the bank. I'll tell you why, because there's what's called a customer acquisition cost. So the customer acquisition cost is always a factor of one, the fees that they will charge you in the future. So if you join the bank and they give you £50, that's because they know they will make £50 from you. That's just pure business or pure maths, okay? Because there's no way they can survive without that. So if they say to you, hey, go get another customer, then get £50, that's because you're going to charge that customer £50. If they pay you £50, you're going to charge that customer £100 or dollars. Depends on where you are, okay? But the point I'm trying to make there is the fact that when they pay you to come in, those fees are not free. There's no free lunch. So they will charge you for that. Okay, that's one thing to watch out for. If they don't charge you, then that bank is going to go down. Then you're ready to take your money out as soon as possible. So if they charge you, they say, listen, we're giving you £50 for no reason. Just love you, that's why. And they do that for 1 million customers, okay? That's 50 million that the bank has just lost on advertising cost, right? Without getting that money back. Okay, so that's important to note. And then if for some reason they charge you, and you want to go ahead with it because of the charge, then know that you will be charged back at some point. And it could be just, again, it could not be fees, it could be a mortgage. If you get a mortgage off them, that's good because they've looked at your profile and they think that you joining them, most likely you will get a mortgage with them, and then those fees will come into that as well. But I think it's just important to know it's not free, okay? And the money they give you as well, even if they give you cash, is not pure cash. You are the product, okay? So know that anything that is free, you're the product. If you notice that, then you're good. Then make that decision yourself. Okay, I talk about a lot. I always talk about social media. Okay, so Facebook is free, YouTube is free. But is it really free? If you're not paying money for it, then it's not free. Okay, already the ads, I'm not sure how many ads are going to show up here. So ads keep showing up because someone has to pay for it. Okay, or they take your data and know exactly what you watch, where you were, and what point you watch. That becomes a problem. I mean, there was a video the other day of a customer who, the customer raised it with us actually about just the lack of security with a budgeting app that they use. Okay, so they use a budgeting app today. Don't want to mention them. And the budgeting app then actually sells their data and then they get banks working with them. And I said to that customer, I said, how much did you pay for the app? Oh, it was free. I'm like, there you go. If you have a free budgeting app, expect that there'll be adverts because the budgeting app is selling your data to banks, to other fintechs, so that they can sell products to you. Okay, so if you put your information there, put your all the information that you spend on a free app, and know that you're the product. Anything that's free, you're the product. And that's, again, I repeat, that's why most fintechs charge money. So a fintech that charges you money will not sell your data because they don't need the revenue is coming in from your subscription. Okay, same thing with us as well. We sell our rings. Okay, and again, we sell the rings because that's how we provision them. And more importantly, then we don't need the money from the bank. If we work with the bank, that's only because the deposits need to be with the bank. But we will not go ahead and say, hey, we have 10,000 customers or 100,000 customers, and we know what they spend their money on. Can we work together? That's what these free budgeting apps do. So be careful with that. If an app is free, know that you're the product or your data is a product. And if you make that decision, then so be it. Okay. So I'm going to stop here without talking too much. I just want to, just reiterate, guys, please, one, know that your bank needs you more than you need the bank, and know that there's a lot of banks out there, no matter where you are. If you have a phone, if you're watching this on your phone, you can have a fintech app and you can download an app. If you're watching this on your phone, if you're watching this across some countries, again, we're not in every country, but we're not every country that Mastercard is in. So these are Mastercard rings, just so you know. There you go. These are Mastercard rings, and it's got a Mastercard slip in the middle there. So what that means then is that if you want to make a payment with Mastercard, we work with you on that, no matter what country that is. So please order your ring at www.lookat.com, or stay with a bank that actually cares about you, that actually gives you good customer service and doesn't have millions of customers and just sends you to bots. So take care and see you on the next one.